Welcome back, everyone, to Vox Markets. My name is Paul Hill, and by popular demand, I'm delighted again to be able to speak to CEO Harry Adams, CFO Joe Stent, and COO David Christie of Argentex, a leading provider of Forex services to corporates, fund managers, and high net worth individuals. So welcome, guys.
Morning, Paul. How are you?
Yeah, very good. Yeah, well, big congrats today on the very strong 2022 results and good start to 2023. But before we sort of start digging into the details, Harry, I don't suppose you could quickly remind investors of the key USPs of the company and what's behind the really strong Q1 results for 2023, with sales up 34% to £12.7 million.
Yeah, sure. So in terms of who we are and what we do, hopefully you've sort of followed our journey for a while. So there's been a bit of a shift from that sort of high touch, low tech foreign exchange broker to more of a tech enabled, high touch payment service provider. So we've invested heavily in all areas of the business, and both in terms of people, but also technology, to take us on that journey. And quite clearly that journey and those investments are starting to bear fruit. So really what we're doing is we're focusing on a market that tends to be on the little bit more sophisticated end of the corporate sphere. So a lot of the corporates are multinational. We deal with a lot of institutions, a lot of REITs, fund managers. So we don't really get involved with the smaller SMEs. We let the the tech disruptors deal with that end of the market, but we're here to provide bespoke hedging strategies and foreign exchange payment solutions to the sophisticated end.
And did you see any sort of like change in corporate behaviour at all during the sort of like the recent banking crisis? Because obviously the banking sector, the financial sector, has been up and down.
Yeah, look, we've seen behaviours change dramatically, really, in terms of Brexit, COVID, the mini budget. Of course, the client base is always picking up the phone to us when we see these black swan events. The most recent with SVB was quite a clear opportunity for us. It just so happened that we launched our new alternative transaction banking products a couple of weeks before that. So it gave clients, new and old, an opportunity to move money to a credible alternative provider.
Good. And then, Joe, can you just talk through the sort of key financial highlights, and also, given all these black swans, in fact, they'd say turning into a bit black ducks, I think, so getting a bit more common. Can you just sort of like the resilience of the whole sort of like the company? Because I mean, you haven't really sort of like broke a sweat really, or certainly not optically anyway.
Well, I mean, in terms of the key financial highlights, I mean, we delivered a 46% increase on FY22 across the 12-month period to 2022, with revenues of 50.4 million in that time frame. And that was really largely underpinned by a step function change in our average revenue per corporate client traded, which increased by 45%. And that's driven by the new product mix that we're able to offer. So the introduction of structured solutions, for example, now representing 10% of our revenues, as well as new channel capabilities. So giving our clients the flexibility to trade online. And with that now representing 3% of our revenues, all of that put together delivered that significant uptick in average revenue per client traded. We also did add new business in the year, but 22% of the 50.4 million delivered in that period was new business related. So that's kind of covers the top line. We have communicated previously our investment in growth, and so adjusted operating profit margins did decline as planned versus FY22. So although we did deliver higher than expected or higher than anticipated adjusted operating profit margins to the tune of 24.4%. And that's really reflective of that investment in growth, primarily in people. We grew our people from 112 at the end of March to 137 at the end of December. And that's really very much front office focused, as well as with a key emphasis on technology development in order to sort of drive growth in the future. So those are the sort of the key components of our investment in growth across all three pillars of our growth strategy: people, tech, and international expansion. We continue to invest in the setup of overseas offices as well.
And just in terms of that, just in terms of the structured products, just for investors, as to what are they? Are they sort of options? Are they derivatives?
Yeah, effectively they're options. So the difference between Argentex and a lot of other non-bank providers are that we hold an e-money license and an investment license. So we're able to offer sort of full suite of hedging products and a full sort of strategy, I guess, dependent on first of all the client's appetite, but of course making sure that the product that we're offering that client is suitable. So often, the clients will want to protect their bottom line, but they would like to have some sort of participation or gain if the market were to move in their favor. So it's not for everyone. As I say, we had to make sure that the clients that are wanting to take advantage of these products are suitable.
Right. Okay, good. Now, David, just on this sort of technology, I mean, we've made great strides over the past sort of 12 months, and it does seem to be sort of growing at really strong double digits. In fact, almost triple digits, not quite, but, doing really well. What's a sort of like the technology roadmap and the strategy behind the sort of the IT platform, building that one out?
Okay, so there's been multiple angles across the last 12 months. The first one was to internalize our technology team. We did have it outsourced originally. They did a great job. But there were a small team that were relatively expensive. As part of building out that team, we've more than doubled the overall capacity for change, which has allowed us to do more faster at a reasonable price. So a lot of the initial impetus was around that. Starting off with phase one, which is really about supporting an extra channel with the dealers. So creating more ease, speed, and convenience for our clients so they could do their administrative trades, their time-sensitive trades. As an example, there was a client on just before 7 o'clock this morning doing a rather lumpy trade. They would have had to wait for the dealer to come in at around 7 o'clock, but they could get on with their day quite conveniently. So the original focus was on that. More recently, we delivered, as Harry said, the alternative transaction banking product, which is really a multi-currency virtual IBAN capability where clients can not only trade like they have been able to do, but also hold as well as pay out balances. That gives them a number of dimensions. It allows them to make a decision on when they do their trade. If they get money in, they can trade at their convenience if the currency's in their favor. If not, they can sit and hold. But they can see that exactly what the balances have got in a mark-to-market manner easily and immediately. So building on that foundation of that transaction banking foundation, we're really going to start now verticalizing the business and looking at products that are specific to each market, like mass payments, request to pay to target the exporter market, as well as FX exposure analysis for some of our larger clients, which want to see the bigger picture and help them manage that overall experience. So we'll see the products lay up over time, over the next little while. And as we add more capacity to the team, we'll be able to deliver more of them products faster. And as you've seen in the results, we're getting deeper wallet share. And with these extra products, we get further and further embedded into the client. And that allows us to realize that potential with higher margin opportunities.
So on that wallet share, just say, for example, I don't know, I'm a car manufacturer, etc. I'm importing components, etc., from all around Europe, and I've got a European workforce, but I'm currently only using the service maybe in the UK, and I want to sell obviously the vehicles or whatever it is, my products overseas as well into Europe. With that extra technology, what's it going to bring for me?
So effectively, you can open a currency account in days rather than months, like you would with a bank. They can then issue that virtual IBAN to their clients. The clients can then pay in local currency, so they're not taking the FX risk, drop that straight into the account, and it's immediately visible to our client to be able to then trade away as they see fit. If they then need to convert it and then pay their suppliers, which might be all over the world, in this particular scenario, they would have suppliers from Japan right the way through to Korea. They can then actually ship them payments and pay them suppliers as well. So it's an end-to-end service proposition. Collect from their clients as well as pay out to their suppliers and manage that whole risk.
Fabulous. Okay, then Harry, can you give us a quick update on where we stand with the international expansion? Obviously, it seems to be going great guns out in Holland, and then when we're going to get the sort of the green light for Australia.
Yeah, sure. So yeah, the setup costs have been baked into the 9 months. The majority have been baked into the 9 months just gone. So I think it's important to say that we have an office in the Netherlands that's grown from a few people in a serviced office to 22 in their own premises on the canals, and that's actually starting to attract top talent. People who are working within this industry want to come and work at Argentex Netherlands now, which is great to see. So they contributed £2 million of revenue to the group in the 12 months, which was above expectation. With the credible license from the Dutch National Bank, that allows us to passport seamlessly across Europe. And with the investment that we made in the technology and the alternative transaction banking division, that also allows us to start generating NL IBANs, which will make us sort of only one of 3 businesses in the Netherlands that can, sort of non-bank businesses in the Netherlands that can offer NL virtual IBANs. So it is an amazing foundation on which to build across Europe. And looking at the market itself, the European market can be up to 10 times the size of the UK just on currency management alone. So we are excited about that. We knew that there was going to be a long lead time to get that credible DNB gold license, but we have it now. We've got the technology, we've got the people, we've got the rails. So looking forward to investing in more people and getting that market growing. In terms of Australia, we have our draft AFSL, so our Australian Financial Services License. Really now, from this point on, it's just admin. We've had to lodge with Austrac, which we've done. So it's just a process there to get the seal of approval, I guess, from ASIC. Once we have that seal of approval, there's still going to be a little bit of lead time to getting fully operational down there. Although the team are there, they've got the pipeline, it's growing. But Dave and his team just need to do a little bit of behind the scenes, get the plumbing in place. We've got the banking partners all lined up. So there'll be a lot shorter lead time from getting licensed to operational in Australia. We're also deepening some of our relationships with our global counterparties and our tier 1 banks that allow us to enter new markets without having boots on the ground. So that could also be rather exciting. We've got
which countries are those? I mean, is that sort of like a sort of I don't know, competitive or?
I wouldn't want to give all the
under wraps. Okay.
So
okay.
We'll leave something for this time next year for you.
Okay. In terms of that sort of expansion into Europe, is that largely the £2 million existing UK clients you're following them into Europe, or is that actually new clients you've won, or a bit of both?
So this is new clients that the Netherlands sales team have won.
Wow.
Due to the loss of passporting and Brexit, we've had to service our European clients via third parties, which is incredibly expensive, and also we have no sort of control or autonomy on their payments. So now we're able to onboard all our new clients to the BV, so the Amsterdam entity. We'll also migrate all of the European clients over to the BV. But in answer to your question, they are new clients that are being serviced by the Netherlands office.
Great, fantastic. Now, Joe, I did notice at the end of December we had net cash of £26 million. What are sort of like what are your plans on that with the sort of investments and dividends, and where do you see that one being put forward?
Yeah, well, I mean, in terms of dividend, the dividend proposed for the 9-month period to December is 2.25p per share, which equates to a 36% dividend payout ratio on basic earnings. It's an uptick from FY22, and that's just really in line with our progressive dividend policy, and in line with healthy cash generation. We see that we are generating and continue to generate sufficient cash to fuel that investment and growth across people, tech, and overseas expansion. So it's really going to be more of the same across those 3 pillars, and deepening into technology, now phase 1 and phase 2, our launch, getting into phase 3, so supporting that, and really all about enhancing that wallet share and average revenue per corporate client.
Good. And then with all that sort of growth coming in going forward, what's the sort of like just broadly the operational leverage, the sort of drop through rates into sort of like, profit? If I put £1 extra turnover on the top, I know it's going to be different by different products and probably regions as well, but just broadly.
Yeah, I mean, if you think about our traditional customer base and product offering to that customer base, when we were a voice broker offering spot and forward, with a smaller cost base to support that, and those operating margins have now decreased as planned as we invest in that growth. But the investments in growth are towards products that are much higher in terms of revenue per trade. So that revenue per product and the consequential drop through to the bottom line is much richer. Such that over in the medium term, we would expect to see operating profit margins increase into sort of high 20s, low 30s over the medium term.
Great, fantastic. And then just on that sort of like the growth strategy, Harry. I mean, if we look forward for the business, and I know I keep asking you about this one, just sort of like you've got all that this sort of Europe, and you've got sort of like Australia coming on board. What sort of like growth should people sort of think about over the medium to long term for the business?
Yeah, look, we remain conservative. I think we've learned from our mistakes in the past where we don't want to be putting too many sort of astronomical numbers out there. We've got the strategy in place. We've delivered on that strategy in the 9 months just gone. Clearly, those results evidence that it's working. So really, it's just more of the same. Our focus for 23 is the same as 22, really, and that is to onboard more clients, making sure that those clients are trading more, using more products, and they're doing it more often. And as long as we're doing that, then we're going to create more revenue. So, David and his team has done a wonderful job in terms of getting phase 1 over the line and launching phase 2, and there's some really exciting products coming over the line in phase 3 that, as Joe alluded to, will increase so those operating margins. There's more efficiencies coming into the business as well, meaning that it's not so manual. So look, it's very exciting. We're well aware that quality of earnings comes from increasing revenue, but also increasing operating margin.
Fantastic. And then just sort of like broadly in terms of the market, I mean, this is a layman's perspective, but you've got obviously the banks have been through a bit of a wobble in March, and some of them are retrenching because they're licking their wounds in terms of balance sheet protection. But equally, you've got the FCA and regulators around the world pushing the bar up in terms of compliance. And so Argentex seem to be in this sweet spot whereby they've got the cash to be able to invest and to grow, plus some of their competitors are weaker. And are you seeing any sort of opportunities, particularly for sort of like, good tech companies or good, regional businesses at all, that effectively need a partner like Argentex to effectively lift and shift them and take them to the next level because they haven't got the financial capital to be able to actually make that next transition?
Yeah, so we've grown at a fairly decent growth level since inception, and that's all been organic growth. This is for a couple of reasons, really, but we believe that Argentex does something differently to the rest of the market out there, and hopefully we prove that we do with that sort of growth, revenue growth that we've experienced. We are a credible alternative to the local sort of incumbent bank now. We do have that balance sheet, as you alluded to, that sets us aside from the competition. We do have that investment license. We do have those credible licenses across Europe and soon to come in Australia, and we will continue to obtain further licenses across the globe. Now, it could be that rather than going about that organically and setting aside a team for a year and a half to obtain the license, there are opportunities overseas that allow us to fast track that. And of course, we are looking at it, and we would be foolish not to. But you've seen a lot of tech businesses that have come to market in the last 4 or 5 years, or even longer, that have had some extraordinary valuations, and now are starting to falter slightly. So, for David and his team to pick up that talent as well, that is starting to fall away from some good companies, some really well run companies, is very exciting to us. And as we're going through a stage of growing that technology arm to the business, it certainly is a big opportunity for us.
Yeah, you do certainly seem to be in a sweet spot where a lot of the bigger cap companies are sort of retrenching, and your smaller caps can't keep up the pace. So you seem to be a lovely place there. Let's obviously wait and see.
Exactly. Your other point, which I kind of missed, I guess, is the regulation. It's not getting any easier. And if you look back at our admission doc in 2019, a lot of what we were basing our IPO on was the fact that we have been belt and braces from day one. We've always looked to acquire the hardest licenses, and there's been a lot of pain in that, but actually it now puts us in very good stead, because this industry, certainly e-money businesses, as we all know, are under the spotlight, and so should they be, because I have no evidence of some not being run probably as well as they should do, but anecdotally I do hear out there. So look, we welcome more scrutiny. We welcome the regulator starting to shine a torch, I guess, on e-money licenses. So yeah, bring it on, really.
Fantastic. And just finally then, Joe, just in terms of news flow and sort of like the what investors should expect for the rest of the year in terms of the financials and reporting.
Yeah, so as you'll be aware, we've changed our year end, so we'll come out in due course with the interims as normal over the summer, and as and when we have material updates along the way, we'll of course post that.
Will you have a trading update at your AGM? When is that going to be? June, is it time?
June 21st will be the AGM. Okay,
and you may or may not have a trading update if you need to or not. Okay, brilliant. All right, well, thanks very much, guys. Big congrats on excellent set of 2022 results and a very strong start, 34% up in Q1 on sales. And I would sort of highlight to investors to have a look, if they can, the Singer's broker note, which came out today, which has put a price target of £2. So plenty of upside to shoot for, certainly. So thanks again and well done.
Thanks, Paul. Good to speak. Take care.